안녕하세요. 다들 좋은 하루 보내고 계신가요? 오늘은 지난번 영상에 이어서 크리스 버밀런의 인터뷰의 남은 부분을 나누도록 하겠습니다. 자, 혹시라도 인터뷰 일부 영상을 못 보신 분들께서는 반드시 시간을 내셔서라도 꼭 보시기 바라겠습니다. 자, 제가 10분 정도로 중요한 부분들만 요약해서 영상을 편집했기 때문에 많은 시간이 소요되지는 않을 거란 생각을 하고요. 분명히 여러분들께서 투자하시는데 조금이라도 도움이 될 거란 생각이 듭니다. 자, 그러면 디스크만 듣고 영상 바로 보도록 하겠고요. 최근 전문 투자자분들과 미팅을 통해서 그분들께서 인공지능에 반드시 필요한 데이터 센터에 투자를 원할 경우에 눈여겨볼 만한 3개의 주식을 공유해 줬는데요. 이 3개의 주식에 관심 있으신 분들께서는 아래 디스크립션에 인공지능 데이터 센터 주식들이라는 링크를 클릭하셔서 그 3개의 주식 리스트를 받아가시기 바라겠습니다. 자, 구독과 라이크 다시 한번 부탁드리겠고요. 제가 눈여겨보는 주식들이나 마켓의 중요한 인사이트들도 가끔 인스타를 통해 나누고 있는데요. 이런 소식에 관심 있으신 분들께서는 아래 제 인스타를 팔로우하시면 되겠습니다. 제가 만든 컨텐츠들은 어디까지나 정보 전달을 위한 영상들이기 때문에 절대 영상만 보시고 주식들을 매도하지 마시기 바라고요. 본인 스스로 반드시 리서치를 더 하신 다음에 판단을 내리시기 바라겠습니다.
We saw the stock market go up and then it sold off. And this is what the majority of stocks are doing. They're in this complacency phase that I just talked to you. People thought, oh, the market's just cooled down and now we're going off to the races. The reality is this is a giant bear flag and we're going to see this market sell off in, I think, a very big way and wipe a lot of people out. It always does. You can only inform so many people and only so many people will take action. This is a very exciting but nerve-wracking time for a lot of people because if you know what you're doing, to me, this is very exciting. To a lot of people, they're nervous, but they don't want to miss out on the rally, so they buy in and they're buying near the highs, in my opinion.
Now, I know back in the dot-com bubble, there were a lot of companies without any revenue or income. Just because they had the dot-com in the title of their company, we saw the stock prices skyrocketing, ending up in a bubble. Now, does the AI hype and the crazy rise of NVIDIA and other semiconductor companies like SMCI or ARM feel like the meltdown we had before in the dot-com bubble? Or since we actually have great earnings that are backing up the price of the stocks, do you think there is still more room for these stocks to go even higher?
More or less, back in the tech bubble, about 34% of the SP 500 weighting was tech. And of course, it was a parabolic move. Everything with the dot-com went skyrocketing, but they were really worthless companies. They were way ahead of their time. Everybody piled in, chased the prices up. Nobody made any money. This time is different. Technology has been grinding its way up. It's back up to those lofty levels from the tech bubble, but they actually make lots of money. In fact, they make way more money than most, brick and mortar homes or businesses now. So it's interesting that I feel like we're at a major stock market top and we have technology being, 34% weighting of the SP 500 again, just like in the tech bubble. But it is a different story. Technology is more valuable than almost everything else. So it does carry a lot of value, but the PE ratios are still way out of whack, in terms of the norm. And so there's room for them to have a big correction, a big pullback in value.
I know that there is a lot of money on the side. So I heard that there's over $6 trillion in maybe bonds or out of the market and are on the sideline. Mm-hmm. But do you think that this money has to come into the market before we see that major market crash? And if that's the case, if the 6 trillion or, some portion of that money has to come into the market, I assume that you might be anticipating that the market will go higher before we experience that drastic crash, I guess.
Yeah, it's tough to say. I mean, there's so much money out there. I don't think it has to come into the market. Maybe it does. Maybe we have a big blow off phase. Maybe the stock market starts screaming higher. This is where, I really step apart from everyone else. So I don't really try to predict or pick a top. I share what I think is going to happen, but it has no weighting whatsoever in my trading. For example, I have been bearish really since the market started to go down. I'm bearish all the time. I feel like the market is getting closer and closer to this major, decade-long bull market coming to an end, or longer than that. But we're long the markets. I don't trade what I think and feel, and that's what most people do. They wait for the Fed and they trade based on the Fed. They think all kinds of stuff and they play their emotions and what they think is going to happen because they don't feel safe or they're shorting the markets right now. The key to success is to follow trends. And that's how we make money. It's not about trying to outsmart the market. You're never going to outsmart it. You might do it occasionally and think you're, superhero, but that was a fluke. You'll lose more times than not. So I don't know what's going to happen with the 6 trillion on the side. I like the correction because it gives us an opportunity. We can build up capital. And during a recession and a bear market, all kinds of deals pop up. Real estate, businesses, equipment, you name it. There's a million things that instantly, if you have lots of money and you've saved and protected your capital, it's like a kid in a candy store for an investor. You're like, what do I want to buy? You just want to go and buy all kinds of stuff because everything's undervalued at some point, and it's going to generate great returns, and you can diversify and all that stuff. So,
all right. So finally, I just had a last question: is how are you preparing yourself right now? So I know that you follow the trends. So I assume that you would be in the market at this point, but I just want to hear if you are actually in the market or if you're just holding money into like the BIL, or I guess you're not, but if you're even shorting or starting to think of shorting the market as well.
yeah, we won't be shorting anytime soon. We need a stage 4. Pretty much the market probably has to fall 15 or 20% from where it is right now, and potentially further before we actually click into a stage 4. So a lot of damage has to be done. And while the market falls in that direction, we'll be trading different assets to profit from that. But we don't buy any inverse ETF until we are in a stage 4 decline. I mean, as we start getting into inverse ETFs, it's been a bloodbath for a long time. People are suffering, businesses are going bankrupt. And that's when we start actually buying inverse ETFs. In terms of the market right now, we're long the NASDAQ. We hit our first target a week or so ago. We're also long the SP 500 with the SPY. We hit a target with that last week. And so right now we're 50% of our portfolio in the stock market. 50% of our portfolio is now in cash and BIL, just collecting daily interest and monthly dividend payment. And that's how we're sitting. We're sitting pretty. If this market keeps ripping higher, we're going to benefit. If it stalls out and rolls over, we have our stop at our entry price for the balance of our positions. So either way, we close it out. It'll be a nice winning trade. Plus, we're collecting cash. Both QQQ and SPY paid out a nice dividend today. So we're also getting a nice dividend payment from those ETFs as well. So yeah, we're long the markets with half of our portfolio and just hanging tight.
Thank you for sharing that. I think we went through a lot of great insights here, so I'm pretty sure it helped a lot of our subscribers. But
Great.
Chris, again, I want to thank you very much for your time and all your great insights. And I always learn so much from your interviews. So thank you very much. And I'm looking forward to having another great interview by maybe the end of the year to see how the market plays out.
Yep. Sounds great. Appreciate it.
All right. Thank you.
조금이라도 도움이 되셨다면 주위 분들과 나눠주셨으면 너무 고맙겠고요. 구독과 라이크를 해주시면 더욱 감사하겠습니다.